Hello students, I am S.V. Chinchini, Associate Professor, Government First Grade College, Dandeli, Uttar Kannada. Today, I have chosen minority interest calculation, which is under holding company or group accounts. Before going into the calculation of minority interest, let us try to know some of the important terminology we are using in holding company accounts or group accounts. First one, what is holding company? The term holding company means if one company is acquiring more than 50% of equity capital in another company, that acquiring company is called as holding company, and the acquired company is called as subsidiary company. Let me make this more clear by taking one example. Assume that A company limited and B company limited are two companies. In B company limited, there are 10,000 shares of rupees 10 each. It means the share capital of B company is 1 lakh rupee. So out of 10,000 shares in a subsidiary company, this A company acquiring 6,000 shares. Then this A company, which is acquiring more than 50% of the shares, is called as holding company, and other shares, that is 40% of the shareholdings which are held by the outsiders, they are called as minority shareholders in subsidiary company. As the holding company is acquiring the majority of the shares in subsidiary company, this company is also called as controlling company. As it is controlling major part of the equity capital and exercising more control over the board of directors, it is called as controlling company or holding company. Here, in the subsidiary company, the shareholders who are minority shareholders, their interest is to be calculated to know what is the total minority interest. For this, we are preparing a statement called as minority statement or minority interest statement. Here, the subsidiary company's capital, reserves, profits, and over or undervalued assets, all these items are included in this minority interest calculation chart. In this chart, we take 4 columns generally. One is for particulars, second one is for total amount, third one share of holding company, and the last one the minority shareholders. Always the first item in the statement is the share capital. This share capital is the subsidiary company's share capital taken in the second column. The share capital of subsidiary company total amount is taken in the second column. And this is to be now divided between holding company and minority shareholders. This is distributed in the ratio of holding. How to calculate holding ratio? Holding ratio is nothing but it is the ratio between the holdings of holding company and the remaining shares in subsidiary company. In our example, out of 10,000, 6,000 shares are purchased by holding company. It means remaining 4,000 shares are held by minority shareholders. 6,000 is to 4,000, 6 is to 4 or 3 is to 2 is holding ratio. In this ratio, this capital is divided. Second one. The second item in the minority interest statement is reserves. This reserve is divided into two parts, that is pre-acquisition reserve and post-acquisition reserve. The meaning of pre-acquisition is any reserve which is there in the subsidiary company before it is acquired by the holding company. Those reserves we call them as pre-acquisition reserves. Similarly, those reserves which are created after the acquisition, those reserves are called as post-acquisition reserves. Then here, pre-acquisition and post-acquisition, this amount is to be calculated before entering the amount in minority interest chart. Look here. Assume that accounting year of a subsidiary company is a calendar year beginning with 1st January and ending with 31st December. This subsidiary company, if it is acquired on 1st July, exactly in the middle of the year, then from January to June 30th, this period is called as pre-acquisition period, and from 1st July to 31st December, this period is called as post-acquisition period. The pre and post-acquisition period ratio is to be calculated. This is called as time ratio. In this example, it is 6 months before acquisition and 6 months after acquisition. The ratio is 6 is to 6 or 1 is to 1. The reserves of the subsidiary company, they are to be calculated according to information available in the problem. Assume that in subsidiary company, in the beginning of the accounting year, reserve is 50,000. That is on 1/1/2018, for example. And at the end of the year, that is 31st December 2018, it is 80,000. In the beginning of the year, it is 50,000. At the end of the year, it is 80,000. It means during the year, from January to December, reserve increased by rupees 30,000. This 30,000 needs to be divided in a time ratio to calculate pre-acquisition and post-acquisition reserve. For example, existing reserve on 1/1/2018 is 50,000, and during the year 30,000 is created. As a time ratio is 1:1, 50% of the increased reserve is to be added to the pre-acquisition reserve. That is 50,000 plus 50% of 30,000, 15,000 is added. So pre-acquisition reserve is 65,000. Pre-acquisition reserve is 65,000. And what is post-acquisition reserve here? So during the year, reserve increased is 30,000. Reserve increased 30,000. And here, out of this 15,000 is taken to the pre-acquisition period, and remaining 50% is taken in the post-acquisition period, that is 15,000. 50% of 30,000. So total pre-acquisition is 55, pre-acquisition is 65, and post-acquisition is 15, so total is 80,000. And this is to be divided in the ratio of holding, between holding company and subsidiary company, in the ratio of 3:2. Now, like reserves, there is one